There's this thing that regularly happens every time Elon Musk tries to launch a rocket. SpaceX politely calls a rapid, unscheduled disassembly. The rest of us call it a giant explosion. Now, under normal circumstances, a company that regularly turns hundreds of millions of dollars worth of hardware into a fireworks display would not be preparing for the largest IPO in history. Yet here we are. SpaceX is reportedly preparing to go public at roughly $135 per share, raising an astonishing $75 billion and pushing its valuation toward $1.8 trillion. And how it all happened is stranger than you think. So let's observe the 10 strange reasons SpaceX stocks are rising. One of the strangest things about SpaceX is that they have somehow convinced millions of people to watch research and development like it's a sporting event. Most companies hide their failures. SpaceX live streams them. Imagine if your local restaurant broadcast every burnt burger to the entire internet. Imagine if Apple revealed every failed iPhone prototype. You have to imagine it because it doesn't happen. Most organizations avoid this at all costs. However, SpaceX leans into it. And that reveals something interesting. What you see is a company that views failure differently than most institutions. To the public, an exploding rocket looks like failure. To SpaceX, it often looks like information. Observers note that some of the company's most important engineering breakthroughs emerged from test programs that look completely ridiculous from the outside. A Starship prototype explodes. Engineers collect data. A second version explodes. Engineers collect more data. A third version survives longer, more data, and so on and so forth. While the internet is busy producing rocket explosion memes, SpaceX begins producing working rockets. The company now boasts more than 300 Falcon launches, a success rate above 99%, and hundreds of successful booster recoveries. What started as viral failure eventually became operational dominance. Ask the average person how SpaceX makes money, and they'll probably point toward the rockets. And that's probably true. But while the rockets may have built the brand, Starlink built the engine. In 2025, SpaceX generated roughly $18.7 billion in revenue. Around $11.4 billion of that came from Starlink. Think about that for a second. The company famous for rockets now earns the majority of its revenue from internet service. It's a bit like discovering that the most profitable part of a movie theater is actually the popcorn machine. Observers note that this pattern appears surprisingly often throughout business history. A company starts with one breakthrough. Then a second business quietly becomes the financial powerhouse. Amazon had online retail. Then cloud computing arrived. Apple had computers. Then the iPhone arrived. SpaceX had rockets. Then Starlink arrived. This reflects an important lesson about scale. Sometimes the thing attracting attention is not the thing generating the cash flow. One of the more amusing aspects of modern markets is how often people demand immediate profitability from businesses attempting extraordinary things.
Profits, profits, profits! What kind of hippies are you?
Investors frequently ask questions like, when will this become profitable? Which is a perfectly reasonable question. But sometimes the answer is, not yet. And that's exactly where SpaceX finds itself. Despite generating nearly $19 billion in annual revenue, the company reported a substantial GAAP loss in 2025. For some observers, this immediately raises concerns. For others, it reveals a different pattern. What you see is a company spending enormous amounts of money building infrastructure before fully harvesting the rewards. Factories, launch facilities, Starlink satellites, Starship development, artificial intelligence infrastructure, data centers, future projects. The spending list is long. Very long. In fact, some years it resembles the shopping list of a civilization attempting to leave the planet. However, this only shows that for big cooperations, infrastructure often arrives before profits. One of the most fascinating details surrounding the SpaceX IPO has nothing to do with rockets, satellites, or even revenue. It's the voting power. Because despite raising record amounts of capital, the company is expected to preserve a structure that keeps Elon Musk firmly in control. Now that might sound unusual. After all, isn't going public supposed to mean handing control over to shareholders? Technically, yes. Practically, not always. What you see is a pattern that appears repeatedly among founder-led organizations. Control is treated as an asset, Observers note that founders often think in decades while markets frequently think in quarters. Wall Street wants updates every 3 months, but then Mars appears to operate on a slightly different schedule. This helps explain why dual-class share structures have become increasingly common among large founder-led organizations. The goal isn't avoiding accountability. The goal is avoiding strategic drift, because it is difficult to pursue a 20-year vision when thousands of investors are asking why next quarter's spreadsheet isn't prettier. One of the least discussed aspects of the SpaceX story may end up being one of the most important: the employees. For years, many SpaceX workers accepted compensation packages that leaned heavily on equity. At times, people outside the company questioned the trade-off. The hours were demanding, the work was difficult, the missions were ambitious, and the future remained uncertain. But then something interesting happened. The valuation kept climbing. Private tender offers steadily pushed the company's value higher and higher. Hundreds of billions, then more hundreds of billions. Now, potentially approaching $1.8 trillion. Suddenly, stock grants that once looked speculative began looking very different. Observers note that some of the greatest wealth creation events in modern business history emerged this way. Not through salaries, through ownership. And what you see is one of the oldest wealth-building mechanics in existence quietly unfolding again. The engineer writing code, the technician assembling hardware, the operations specialist managing logistics. The employee badge may look ordinary. The equity attached to it may not. The irony is that while the public focuses on billionaires, many of the most significant wealth creation stories happen quietly inside organizations long before headlines arrive. Wall Street loves predictability, but as for SpaceX, it loves launching something, and breaking something, then learning something, and then launching another version before everybody has finished arguing about the previous one. These two mindsets do not naturally get along, and yet somehow they have created one of the most valuable companies on Earth. What you see is a very different philosophy toward progress. Most organizations spend years trying to perfect something before the public ever sees it. SpaceX often does the exact opposite: build it, test it, break it, fix it, repeat. The Starship program is perhaps the best example. Over the years, millions of people have watched prototypes explode, engines fail, boosters tumble, and test flights end in what engineers politely describe as unexpected outcomes, which is engineering language for "that was not supposed to happen." The funny part is that these moments often become internet entertainment. A Starship explodes. Social media declares the project dead. 3 months later, another version appears, then another, then another. We've seen this process become one of SpaceX's greatest advantages. While competitors often move cautiously, SpaceX gathers enormous amounts of real-world data through constant testing. For SpaceX, it's practice and patience to build perfection, not the appearance of perfection. People often forget that SpaceX didn't rush to the stock market. In fact, many people spent years asking the same question: when is SpaceX going public? The answer was always some variation of, not yet.
Patience. Patience.
And that reveals something interesting, because while many companies treat an IPO as a finish line, SpaceX treated it more like a tool. What you see is a company that spent years using private tender offers to create liquidity without fully entering public markets. Employees could sell portions of their shares. Early investors could cash out selectively. New investors could enter at updated valuations, and the company itself could continue operating without the daily drama that often comes with public markets. Observers note that this created an unusual situation. SpaceX was behaving like a public company in scale while remaining private in structure. Over time, those tender offers steadily increased in value, then increased again and again. At one point, the valuation crossed $400 billion, then approached $800 billion. Now it sits near $1.8 trillion. This reflects a pattern frequently seen among enduring institutions. Patience creates options, because by the time SpaceX finally reached the public market, it wasn't arriving from a position of desperation. Instead, it arrived after years of strengthening its position. Imagine opening an airline where every plane was thrown away after a single flight. That would sound insane. And yet for decades, that was essentially how the space industry operated. Every rocket built had to be launched. Throw rocket into the ocean, build another rocket, repeat. The process worked. It was just extraordinarily expensive. Then SpaceX came along and asked a simple question. What if we didn't do that? Now, simple questions occasionally produce very complicated answers, and this was certainly one of them. Years of testing followed. Landings failed. Boosters exploded. Engineers lost sleep. The internet gained content. But eventually, something remarkable happened. The rockets started coming back. Then they started coming back consistently. Then they started flying again. Today, Falcon boosters have completed hundreds of successful landings and reuses, helping SpaceX achieve launch frequencies competitors still struggle to match. What you see is one of the oldest economic advantages in history. Lower costs. That's it. That's the secret. Not a mysterious formula. Not financial wizardry. Not a hidden loophole. Simply finding a way to do something expensive more efficiently than everyone else. Observers note that cost advantages often become self-reinforcing. Lower costs attract more customers. More customers generate more data. More data improves operations. Improved operations lower costs further. The cycle repeats. And before long, what looked like a clever engineering trick becomes the way. One of the most entertaining parts of every major IPO is watching people argue about valuation. Some people say it's too expensive, others say it's too cheap. A third group creates spreadsheets that somehow prove both conclusions simultaneously. Now SpaceX is entering public markets at a valuation approaching $1.8 trillion. Needless to say, opinions exist, lots of opinions. What you see is a familiar pattern that appears whenever an extraordinary company meets public markets. The debate becomes less about current numbers and more about future possibilities. Because if someone looks at SpaceX's current profits and losses, they may arrive at one conclusion. If someone looks at Starlink, Starship, artificial intelligence infrastructure, lunar missions, Mars ambitions, and future technologies, they may arrive at a very different conclusion. Observers note that valuation debates are often really debates about time horizons. One person is evaluating the next year. Another is evaluating the next decade. A third is evaluating the possibility of entirely new industries emerging. The funny part is that everyone believes they're discussing the same company. In reality, they're discussing different futures. This reflects an important characteristic of founder-led organizations pursuing ambitious goals. The market often struggles to decide whether it is pricing current performance or future potential, and that uncertainty creates enormous disagreement. The irony is that while investors argue endlessly about valuation, SpaceX appears largely focused on building things. Perhaps the most revealing pattern in this entire story is not the rockets, not the satellites, not the IPO, not even the valuation. It's the infrastructure. Again, because infrastructure has a funny habit of appearing in every story involving long-term success. SpaceX continues investing heavily in launch facilities, production systems, Starlink expansion, Starship development, artificial intelligence capabilities, and future technologies that may not fully pay off for years. To some observers, this looks expensive. To others, it looks strategic. What you see is an organization building capacity before demand fully arrives, and history is filled with examples of this behavior. Railroads built tracks before commerce exploded. Telecommunications companies built networks before usage surged. Cloud providers built data centers before businesses migrated online. The quiet discipline here is understanding that infrastructure creates optionality. Once the foundation exists, opportunities become easier to pursue. Without infrastructure, opportunities remain theoretical. With infrastructure, opportunities become executable. This helps explain why SpaceX often appears willing to spend enormous sums today for outcomes that may arrive years from now. The company isn't merely solving today's problems. It's preparing for tomorrow's possibilities. And when viewed through that lens, the valuation begins to make a little more sense. Because the story isn't really about rockets, it isn't really about stock, and it isn't even really about space. At its core, this is a story about how enduring organizations create advantages. Through patience, through iteration, through infrastructure, through ownership, through an unusual willingness to think beyond the next quarter. SpaceX did not become one of the most valuable companies in the world because every rocket succeeded. the internet has plenty of evidence disproving that theory. Instead, it became valuable because failures became lessons. Lessons became improvements. Improvements became capabilities. And capabilities became advantages that compounded over time. The strangest reason SpaceX is worth $1.8 trillion is not because it avoided mistakes, but because it built an entire system around learning from them faster than everyone else. Sometimes the most valuable organizations aren't the ones moving perfectly. They're the ones moving persistently. And if you enjoyed this video, don't forget to like, subscribe, and let us know in the comments. Do you think SpaceX's valuation is justified, or is Wall Street getting a little too excited about Mars?